Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Sandy Chadha and CFO Suzanne Smith of Supreme, a leading brand owner, licensor, and distributor of FMCG products across vaping, sports nutrition, lighting, batteries, and soft drinks. So, welcome, guys.
Thank you.
Thank you. Nice
Yeah, well, big congrats on today's record first half results and upgraded full year guidance. So maybe we can start there, Sandy. Can you just quickly take us through what sort of like driving the business on the top line at the moment, and also the sort of the health of the consumer?
Yeah, so health of the consumer on our products is still strong, and we've not seen any decline. I've heard that other sort of discretionary products are struggling a little bit more. Our top line is up. I mean, we have had an acquisition in there as well that's helped that, but overall, we're in a good place. We're in a good place at the moment.
Okay, and then just on those vaping products, you just talk the difference between the distribution of Elf Bar and Lost Mary. They went up as a group, whereas obviously your own internal brands went down year on year. Can you just take us through that movement?
Sure. So, I mean, we've been lowering our exposure on our 80 vape disposables significantly, and our new products are coming to market in the next few months, ready for the transition. And we've been pushing a lot more of the branded distribution, which is a lot easier to sell and a lot more quicker at the time towards the end of the ban to actually sell through. So I guess it was more of a transition over. Net effect, I think, is not far different, but overall, that was the thing, is keep our exposure quite low, so we haven't got a massive write down at the year end on our 88 products.
Yeah, that's just the disposable side, because the refillables are fine, aren't they? Can you just give the audience a bit of update on the status of the legislation for disposables, and then also what got put into the budget as well? Because I think there's a new tax, isn't there, coming in 26?
Yeah, no, that's right. So by June next year, no more disposables are allowed to be sold in the UK. However, in both 88 Vape and in the branded distribution side, we have got the direct comparisons with the direct commercials and the direct flavor. So I think it's going to be like for like switch. How the consumer transitions over, yet to be seen, but we're quite confident that we should just transition over smoothly. And the second question was on the tax. Tax is coming in on vaping liquid at £2.20 per 10 ml, regardless of the strength. And this will coming in play in about 2 years' time, so October-ish 2026. So just under 2.
Yeah.
And I guess so we got a lot of time for that to prepare, and we will be ready to consolidate with the industry, because I think the industry is going to consolidate. A lot of small players will start to look at other areas, maybe a sale of the business, or maybe someone else to make or fund them. And there'll be a lot of trading down, we believe, after the tax comes in place. I mean, you know, someone that's used to paying £3-4 can still pay probably, you know, £4 from us, whereas their products that they currently buy will probably be £6-7 now going forward.
Yeah. And then that begs the question then, Sandy, given you're quite acquisitive, admittedly you're buying stuff outside of vaping, would you be, I mean, difficult to say, I suppose, but would you be a consolidator, or would you be consolidated, or that becomes down on opportunity?
Yeah, that's opportunity, but I think we will potentially be picking up a lot of NDAs and signing a lot of looking at a lot of businesses that we can potentially integrate at Supreme over the next 24 months.
Okay, cool. That will be exciting stuff. Okay, well, let's move to the financials, Suzanne. Last time you released a clean sweep of numbers. Now you've done a double full sweep. So can you take us through the sort of top line, the improved gross margins, the higher EBITDA margins, and the very strong cash generation?
Yeah, it's really easy for me to do that when the results are so good. So yeah, as you said, revenue's up 8%. Our adjusted EBITDA is actually up 22%. It's right up to 18.5 million for this period. The reason for that is a mix. We have growth in our core business right across the categories. You'll see there's growth in batteries, lighting, wellness. In vaping, excluding disposables, which I think we've already really covered. And then, of course, we've added a new vertical, soft drinks. So that's also been earnings enhancing, but also EBITDA margin enhancing for us as a business as well. We've continued our really strong discipline on kind of cost control and cash control as well. That is kind of undisrupted regardless of expansion and M&A. Our gross profit margin in particular has shifted from 27% up to 30%, which is a big milestone for the business given the real blend of manufacturing and distribution that we do. And the addition of Elf last year, whilst we knew was absolute gross margin additive, we knew that as a distributor of somebody else's brands that diluted our initial sort of gross margin percentage, but really pleased to report that that's right back up there. And that's because of the sales mix within the remainder of the business being particularly strong. We've seen whey prices stable within sports nutrition and wellness. We saw last year the consolidation of our 3 manufacturing sites in vaping, and we've got the full year benefit of those. We've continued to scale our 10 ml e-liquid business, which again is further additive to gross margin improvements. And we've seen some small improvements elsewhere as well, even within lighting and in batteries as well. Better buying, better freight, better foreign exchange. So yeah, we've had some really helpful tailwinds this year, combined with just further scale and just further disciplines across the business. So yeah, really happy. Overall, our EBITDA margin has gone from 14% to 16%, which tells us that we're just working smarter and getting a better return for every pound of top line revenue.
Yeah, and you've pushed the dividend up as well, haven't you, for income investors?
Well, the policy is unchanged. We remain at 25% of profit after tax annualized, but obviously as the profits go up and the number of shares in circulation doesn't change, then yeah, the dividend per share increases. So yeah, really happy to announce the 1.8 pence per share this morning.
Yeah, and then the upgraded guidance. I see you've obviously going to have. It seems if you work it back, you re-engineer it, you're going to get a stronger second half than even if you've had a stronger first half. And what's driving that? Is there a bit of seasonality, or is that still a sort of organic?
No, we've had a better first half than we had anticipated, but most specifically, the delay in the disposable vape bans, which has moved from an April, it was originally earmarked as an April date, and now that's shifted to June. And we had originally assumed a very cautious approach to Q1, so January, February, March, or the final quarter of our financial year. We'd taken a very cautious view. But now as that disposable vape ban shifts, we are much more confident with the ongoing trading for vaping in that quarter than we had been previously. So that has driven kind of the guidance. But also, as we always do with M&A, we've been quite cautious with Clearly Drinks and the soft drinks business we bought in June. And now kind of 3 months into that business where we're a little bit more confident on what it can deliver on a full year basis. And we've had some savings in our overhead base as well, specifically around our establishment costs around our operations. You'll know that we've consolidated all of our operations now virtually into ARC, our centralized distribution center, and we've made some savings elsewhere in our portfolio. So yeah, it's a win across the board really, but largely as a result of the branded distribution shift in date.
Yeah. Well, I would just to highlight to investors, actually, the EPS adjusted seems to have come in at just over 11p per share in the first half. And then on an increased EBITDA in the second half, 10%, 15%, you're probably talking of, I'm just guessing here, because I'll have to look at the broker numbers when they come out, but let's say 13, you get 24p of EPS in the year. Just an idiot like me, if you do 10 times that, you get £2.40. So I'd strongly suggest investors have a look at the broker notes and work out your own valuation. But as a rough guide, that it sort of like gives you a few. And on your cash, you've got adjusted net cash at the end of the period as well of 2.3 million pounds, haven't you? So presumably you're going to be cash generative in the second half as well.
Yeah, correct. So we've still cash in the bank and no utilised facilities at the period end. Now, not forgetting, in this period, we've just acquired Clearly Drinks for more than £15 million. So to be able to have done that out of our free cash, our own cash reserves that we've generated through the profits we've made is a great achievement. That we're not borrowing any money to invest in those businesses. That's really the kind of underlying pillar for growth for the business, that the core business throws off cash as it has done historically and continuously, and that's then reinvested back into the business through M&A or kind of vertical expansion. So yeah, it's another added bonus.
Brilliant. Okay, well, let's turn to the sort of strategy side here then, Sandy. I mean, obviously you bought Clearly Drinks recently, and I'm guessing you just take us through how the status is with that, with the integration, and then also, given you've bought well in the past and you've got a strong balance sheet and plenty of cash coming into the business, how are you sort of like viewing M&A going forward?
M&A is still high on our agenda. We've still got lots of things in the pipeline that we're looking at. In terms of Clearly Drinks, running really well. We've managed to win the contract in one of the discounters, actually possibly two discounters with some private label. We're bringing out a whole range of NPD early part of next year. We've got some licenses that are phenomenal that we're signing and signed up. We believe that that business will be firing on all cylinders next year. So let's see how that goes. And just to clear, so the full year guidance then for this year is 40 million EBITDA. That's from the analyst, and a revenue of 224. I believe, is that right, Suzanne? Just for
240.
240, yeah.
40, yeah. So 240 and 40 EBITDA for this year. So overall, for us, it's brilliant in terms of 12 months ago where we were to where we are now. Really in a competent position in a really good place.
Yeah, and then just on the M&A, the business is split now 60-40 between non-vaping product is 40 and 60% is vaping. How do you see that split going in terms of that M&A directionally?
Yeah, it really depends what comes across our table. But I think it was going to end up more like 40% vaping and 60% everything else, if the things that happen that I would like to happen.
Okay, good. And then Suzanne, just in terms of if you do have excess cash, you did do a small stock buyback at one stage, didn't you? Is that finished, or how do you view buybacks?
Never say never. I think at a time like now where our M&A pipeline, as we've referenced in our RNS today, is particularly buoyant, let's say, it's plentiful, it feels that that's the primary objective, that's the best way to return money to our shareholders in the more longer term, is to reinvest it back in the business through M&A. If that dries up and there's money to spend, but there's not M&A for us to target, then buybacks are the next obvious option. But for now, I'd say M&A is our primary focus.
Yeah. Okay, good. And then I guess that leads into the sort of future news flow. I imagine you're going to probably have a trading update in January, but that assumes that you may have some news coming up in between, you may, in terms of deals or deal flow potentially. You wait and see.
Let's see.
Okay, cool. All right. Well, thanks. Really well done on that first half, guys. Fabulous set of numbers and upgraded guidance. So I'm sure investors will be smiling all the way to the Christmas dinner on these results. So thanks again, guys.
Thank you.